unless we get further weakness in the data, we're going to get 25 basis points in September, probably another 2 cuts this year. So, we think that picture is on track, and we also think there's a soft landing. And if you start to get Fed cuts and you don't go into a recession, that is usually a very good setup for stocks into the next 12 months.
And that's pretty much your base case. I mentioned the curve could smell a disinversion. We did it on August the 5th. And I think it's a tantalizing way to look at the curve. Many bond traders might disagree with me. But how important is that, Mark? If it does disinvert, what does that signify to you as a global wealth manager?
Well, I think that, when we look out kind of longer term and talk to our clients, we say, hey, have the dynamics changed? Does the debt in the system, the larger forces, demographics, debt, how does that change what's going to happen at the longer end of the curve? And does that create a need to change your asset allocation, maybe rely less on bonds going forward and more on equities or privates, for example? So it's definitely something we think about. But at the same time, I think there's been a lot of false signals in maybe in the bond market recently, as really the story has been, why did we have this inflation and what are the forces that are bringing it back down again?